Hi everyone, it's always nice to meet you in a new episode of our gold price weekly forecast. Gold today, we're going to start with the numbers. On the last trading session Friday, gold spot printed a closing price little above $1,817 per ounce, and on the last week, gold traded as low as $1,790 per ounce and as high as $1,829 per ounce. Numbers are rounded and the market is closed. Gold, from a technical point of view, it could be described as neutral, and it's trading above its all daily simple moving averages at the moment. And for the RSI readings, it's moderate on all the charts. Moving on to the support levels and the resistance levels, the supports are seen at 1811. If 1811 breaks, then you have 1808 and 1807, then 1800, then 1790, and the resistance levels at 1833, 1845, 1859. The pivot for the weekly chart at 1812, and for the daily chart at 1820. One will act as a support and the other will act as a resistance. That's all for the numbers. We'll move on now to the economic calendar. On the economic calendar for the coming week from the United States, the market is waiting for the following economic headlines to be released. The building permits and the housing starts on Wednesday, Philly Fed Manufacturing Index on Thursday, and the initial jobless claims as well on Thursday. That's all. We'll move on now to the trading strategy. Hi again. In this part of the video, we are going to have a quick recap of our last video, and then we will move on to the US dollar chart to find any helpful clue, and then to the gold chart, and after that we will arrive at a conclusion. Moving on to our recap. In our last video, we expected that gold is going to rally, and we have spotted some points for reversals, 1007, 15, 24, and 30. We said that gold is supposed to reverse back from any of these points. Moving on to the US dollar daily chart, as I said in my last video, actually any dip in the US dollar should be considered as a buying opportunity for the US dollar and as a selling opportunity for anything that is priced against the US dollar. What have happened on the last week, that we have seen that the US dollar sold somehow heavily and went all the way down up to 94.5. However, what matters for us that the US dollar found support right above the neckline of the inverse head and shoulder, which is a highly supported area, which is telling you that the US dollar is not done to the upside. By another way, we can say that the US dollar, by bouncing from this level, validated the continuation of the breakout which we have had since the second half of the last year. Moving on to the gold chart, as you see, gold is stuck below 1833. It's very clear and no need for argument about this. If gold can break above 1833, you can see a continuation up to 1870 or max to max 1911. If gold struggles longer time below 1833, gold is going to break down below 1800 and maybe below 1750 and even maybe below 1700 if this is going to be a major cycle correction. Actually, we are not in a 50-50 probability wise situation. I mean, like a breakout is not as equal as to a breakdown. The probability is different. The bearish case scenario is higher than the bullish case scenario because the intermediate cycle of gold topped and gold has to do its major low at any time from this moment, and add to that all these rejections that we have seen ahead of 1833. As a conclusion, I believe that gold is due for a major correction. However, we have one risk factor, the Chinese New Year, which usually the price of gold rallies ahead of the Chinese New Year. However, I am bearish on gold. I'm selling any peak of the rally if a rally happens. I do advise you not to buy gold unless gold close above 1833 for a one session at least. Otherwise, it's a sell. That's all for our video for this week. Thank you guys for watching. Please like and subscribe, and I will see you next week in another video.